Welcome everyone. So entrepreneurs, out of entrepreneurs, there are so many entrepreneurs out there in the world. This is the richest person in the world right now in the world, Jeff Bezos, from Amazon, the founder. Jeff Bezos is a founder, e-commerce giant Amazon in 1994. Out of his garage in Seattle, he stepped down as CEO and to become executive chairman on the 5th of July 2021. So now you can see his famous statement. I didn't think I would regret trying and failing, and I suspected I would always be haunted by the decision to not try at all. Like you mentioned, this is actually the risk-taking quality, the ultimate, the risk-taking objective. You can see the quality inspiration talked by the entrepreneurs, decision-making, innovating, organizing, and risk-taking abilities are there. You can see all other entrepreneurs here. World number 1, 2, 3, 4, 5, 6, everything. Elon Musk, Tesla, automation, entrepreneur. Bernard Arnold, textile, fashion retail, Louis Vuitton, everything. 72 years old, 150 billion, France. Fourth place, Microsoft, greatest entrepreneur, Bill Gates. Fourth place right now, 124 billion. Mark Zuckerberg, Facebook, the founder of the Facebook now he owns WhatsApp, Instagram, social media mogul, 97 billion, right? Young guy, 36 years old, right? And Warren Buffett, 90 years old, 96 billion. He's investor, totally financing investment called Oracle of Omaha, Berkshire Hathaway company, holding shares, even including Coca-Cola and so many companies. Even Larry Ellison, Larry Page, you can see software, Google, most of the companies regarding electronic and telecommunication, you can see most of the companies diversified, Google, Facebook, Microsoft, Tesla, right? Amazon, all these things, retailing, online business. Most of the business are online businesses. So this is the thing. Like if you in today's lesson, we are going to talk about the different levels. That if you want to be an entrepreneur, we are going to starting from the beginning from today lesson, like a sole trader to partnership and franchise models. So in this lesson, we are going to cover in my these sessions. Today we're going to talk about how to be a sole trader, and after that, how to be a partnership and their advantages and disadvantages we are going to talk today. So let's go to this case study. That's a nice case study regarding a small retailer. You can see Mariano Bello owns a cafe in Seville, Spain, and which she calls Mariana's. She set up a business in 2012 using 20,000 euro of her own savings and a 10,000 bank loan. So you can see the financing part came from her own savings plus bank loan. After so slow start and she business pick up by when she was began to target the health conscious customers, she developed a range of drinks from freshly sourced fruits and vegetables and use organic ingredients to make homemade snacks. Mariana now employs 6 part-time staff. In 2016, she made a profit of 46,000 euro. So this is the operating kind of like a new innovative market because it's not a normal restaurant; it's an organic and health conscious restaurant. So she's starting. She want to be a little bit differentiated her product, which is like a little bit highlight, a little bit like a different from other normal restaurant types. Because her restaurant only she's selling only healthy items, organic items, fruits and vegetables, everything. She whatever she sells, she's like a operating kind of a niche market right now, not a mass market. She differentiated her product. So you can see she earns a profit 46,000 at the end of the 2016. Go to the other one. This is the dental practice. You can see the case study, the Hatta Dental and Implant Clinic. Hatta Dental Implant Clinic is established in dental practice in Dubai, United Arab Emirates, and which was set up by the experienced dentist called Khalid Said and the Ismail Manzoor in 1997. The practice employs 7 other people, include dental hygienist and administrative staff, and it carried out a range of dental work, including cosmetic dentistry, such as replacing missing teeth and repairing badly damaged teeth. So Khalid specializes in the dental implants, while Ismail is responsible for a range of routine dental work. So you can see this is a typical example of a partnership. So different doctors, they have different specialized areas. That's why when clinic was set up, both partners contributed AED 200,000 from personal savings. So you can see these 2 case studies by looking at this. The first case study with the Mariano was a sole trader started by a lady. And then the second case study, you can see Hatta Dental Implant Clinic is a case study. You can see the doctor, this partnership dental service. So this first question, who owns the business? Who owns the business? I think you can see the first case study, it was owned by a lady. And the second case study, it was owned by the 2 partners, 2 doctors. You can see first case study, Mariano Bello, sole owner, Mariana's. Second case study, Khalid Said and Ismail Mansoor on the Hatta dental practice. They're partners. Second question asking, discuss one advantage and disadvantage. Look at this. So if you are working in a on advantage, forming a business of someone else is that money that you can be raised and setting up, like partnership business. Like you have a two partners are there, Khalid and Ismail. Both they put 200,000 each, which is they can put 400,000 amount to create the Hatta dental clinic. And the challenge and responsibility of running a business can also be shared. Like, the burden can be shared, the responsibilities can be shared. So one major disadvantage is that the profit has to be shared and the owners maybe disagree and fall out. Yeah, there are friction between partners. These are the things. Look at the third question. Business owners have to take a risk, right? Imagine the statement of the Jeff Bezos. He says he don't regret of taking like a trying and failing, because that's the main thing that just so far he was haunted by that attitude. That's why if you get rid of that thing, the fear of failing, then you can do anything actually. And sometimes you can be a richest person like Jeff Bezos. So in both cases, the owner actually, both of them are taking a risk, their own money, and they're setting up the business, they're running a business. Both of them, they're taking a financial risk of their own money savings. In this case, Mariano's bello used 20,000 euro of her own savings when she set up in the cafe, and also Khalid and Ismail also same thing in Dubai. They have invested 200,000 dinar, 200,000 from their dental practices when setting up the business, right? So this is a thing, when you're organizing, when you're setting up a business, definitely you have to take that risk. Not only risk, decision making, innovating, organizing, risk taking, all that things you have to practice. That's the main thing when you're doing a business organization. You have to take that risk. Okay, let's come back to the handout. You can see in this lesson, you can see the handout and everything. They are like, there are pictures also have given. You can see some of them are young, some of them are old, right? They're all entrepreneurs, right? And this business classification, when you're going to start a business, you can classify your business organization according to some legal term we call incorporated businesses and unincorporated businesses. So unincorporated and incorporated definition you should write. The unincorporated mean you can write down there is no difference between owner and the business. There is no difference between owner and the business, which means if owner dies, business also dies with the owner, simply says. Right? That means there is no legal difference between owner and the business. That's the definition. Right? Those business example you can see sole traders and partnership. There is no legal difference between owner and the business. Therefore, business is not treated as a artificial personality. Business is same as owner, which is owner dies, if sole trader. In the previous case, if Mariano bello, if that Mariano dies, there is no restaurant, there is no cafe, because business is attached to the owner. That's called the unincorporated, right? If we have a handout, we can write down. Unincorporated means situation where the business and the owner is similar. There is no legal difference. Example, sole trader, partnership. Whereas incorporated, you can write down. Incorporated means the business organization, there is legal difference between owner and the business, which is owner is different and the business is separate from the owner, which means business has a certain legal personality apart from the owner. Example, you can see incorporated businesses like private limited companies and public listed companies. So what's the definition again? Incorporated means a business where there is a legal difference between owner and the business organization, right? This is the thing, like we can classify according to their main classification of like that. You can see entrepreneurs, they are making decisions, innovators, organizers, decision makers, risk takers. The DO concept here we are explaining here. And just now I explained what is the difference between unincorporated and incorporated. You can see here unincorporated means business where there is a no legal difference between the owner and the business, right? You can use a textbook and you can write down that also. And incorporated definition here, the business that has a separate legal identity from that of its owner. Okay, so we can write with the example here. Unincorporated business are anything like, which carried out with the name of the owner. And these businesses tend to be a small and owned by one person or small group of people. Like sole trader partnerships are unincorporated. That's the main riskiness of being unincorporated business. You can just start your business, but something happened to you, the business also gone, right? But it's not like incorporated, like companies. So company owners are shareholders and chairman, managing director. If that something happens to them, business has separate control. Shareholders are there, director board is there. So that is the director board. That's the owner's survival is not important for the business. This is because business have separate legal personality. You can sell the business to someone, and they can direct the business because the business can do anything like a legal person. Like this incorporated business can buy vehicles for the company name. They have company letterhead, company seal, right? They can buy lands, they can hire employees, they can hire anything. They can buy machines, they can register properties, they can buy apartments for the business name. Like they can do anything like a legal person. Company has a valid letterhead, valid seal, emboss. So that means they are representing, they have some kind of identity. Company can open up a bank account, company bank account. This is called incorporated status. They have a registration ID. They have incorporated certificate like a birth certificate of a person. Therefore, in front of the law, incorporated business are treated as a legal firms, like separate legal entities, like artificial person in front of the law. They can do anything like normal people. But unincorporated business, they don't have that privilege. Unincorporated business, if you have a sole trader business, if you have a restaurant, if you have a small cafe, sole trader business or a partnership business, you can't open up, you can't buy properties, you can't hire or you can hire vehicles, you can't achieve anything for the business name because business is not right. Business is not registered. It's not incorporated. It's not treated as a artificial personality. Business is attached to the owner. In a sole trader business, if you want to open up account, you have to open a bank account for your name, not the business name, because business is a sole trader. So if you want to have open up a bank account, or if you want to have personal different profile like a company seal or address or everything, you must get the registration. First of all, registration means you must convert your business as a private limited or public limited company. So today my focus is going to analyze about the unincorporated business styles. Specifically, we are going to analyze about the sole traders and partnership. In IGCSE past papers, there are so many questions are there based on the sole traders and partnership. Right. So now let's go to next point. After the unincorporated, incorporated, we should know the difference between that, and then after that we should know the examples. Okay, let's talk about the sole traders. So here you can see unincorporated, incorporated definition I have given here, and then let's classify the business according to another classification called liability. Liability. This concept also please make sure to write down, because this also sometimes define questions they can ask. Define the term limited liability. Define the term unlimited liability. This definition you should know. Unlimited liability means the situation where when the business bankrupt, owner has to settle the liabilities from his personal belongings. That's unlimited liability, which means owner is liable to pay the debts from their personal possessions, belongings. Where a limited liability means in case of business bankrupt, owner doesn't need to settle it from the personal belongings, which means owner is liable only up to the investment. The owners are liable only up to the investment. So that's a definitions of the unlimited liability and the limited liability. So always keep in mind, always unincorporated business have unlimited liability, which means sole traders, partnerships, they have unlimited liability. On the other hand, incorporated business like private limited companies, public listed companies, franchises, these models, they have limited liability status. Limited liability means if you become a shareholder, you are liable only up to the investment. If your investment is 1 million, you're only liable up to 1 million. That means you don't need to pay anything beyond 1 million. But this case, if you're a sole trader and if your business has so much of debts to pay, sometimes business properties is not enough. Then sometimes the banker can ask, okay, sell your personal belongings, mortgages and everything. You are losing your personal collaterals, your vehicles, your lands, your business properties, everything. Personal properties also you have to sell in order to settle the debts. That's the scenario. So unlimited liability, little bit dangerous situation. That's why doing a business like a sole trader partnership, this situation is there. But we have to identify, analyze what is the situation, unlimited liability. Setting up as a sole trader is simple because there are no legal requirements. However, all sole traders have unlimited liability. Unlimited liability. This means that if the business fails, a sole trader can lose money more than was originally invested. This is because a sole trader can be forced to use personal wealth to pay off, right? That's why the sole traders thing, right? Sole trader definition. So you can write down the definition of sole trader, right? Business owned by a single person. Sole trader definition you can write down from there. The business owned by a single person we call sole trader. Here we go. The definition you can write down: sole trader, business owned by a single person. Simple definition. Sole trader is a business owned by a single person, right? So it's a simplest form. If you want to be a sole, for example, billionaire in future, sometimes this is your path, this is your journey. Journey begins with sole traders. All these rich people in the world, they start like a sole traders, right? So started like a sole trader. Jeff Bezos is like that, and then after that, Bill Gates, Mark Zuckerberg, same thing. Larry, everyone is like that, right? So we talk about the Mukesh Ambani is the father's business running, right? And then Amancio Ortega, Charles Slim, Carlos Slim, Gautam Adani. Look at even this one. This is an entire family in the rich list. Walmart business. Jim Walton, Alice Walton, Rob Walton. Right? This is all Walmart business. Actually, he was like came from his father, their father, Sam Walton.
Sir, so then it's partnership, right?
No, he started the business from a father as a sole trader, and then he developed into the public limited company. Now their sons and daughters are the shareholders now. So it's a now company shareholders, but in the beginning, origin of the company is a supermarket chain in the USA, Walmart supermarket. It was started as a sole trader, started a small grocery shop, right? The first like a self-service shop in the USA, and then after that, he develop the business, expand the business. Now they have more than 7,000 supermarkets all over the world. And all of them, you can see 66 billion, 65 billion, and the world ranking 16, 17, and 18, all of them. Right? Jim Walton, Alice Walton, Rob Walton, all that, Walmart, sorry, one family members, right? So like that, all these billionaires in the world, you can see sometimes the journey begins with a sole trader. They start very small scale. But now they are billionaires. When you want to develop the business, then you can go to other levels. But always your journey begins with normally a lot of business organization as sole traders. Because that's the first step you have to initiate. Like, for example, Rome cannot build in a one day, but go step by step. I think first step is be a sole trader. Take a responsibility alone. And then you have more money coming in, and then you have a business confidence, and then you can actually join someone else. But from the beginning also, you can have open with a joint, like a partnership. For some business organizations, it's mandatory, like accountants, doctors, lawyers, professional businesses, they should go with the partnership business. Here, sole trader or sole proprietor is the simplest form of business organization. It has one owner but can employ any number of people. Sole traders may be involved in a wide range of business activity. In the primary sector, they may be farmer or fishermen. In the secondary sector, they may be small builders or manufacturers. However, most sole traders found in the tertiary sector, many are retailers running small shop, and others may offer services such as web designing, tutoring, hairdressing, taxi driving, garden maintenance, and so on. Setting up as a sole trader is simple because there is no legal requirement. That's the thing. The sole trader business, that much of you are given more freedom. Why? It's a freelance business. The business is always like it belongs to you. It's like my car, my petrol version, because it's a one-man show, one-man business, right? So that's why a lot of the tertiary sector businesses, we can see so many salons, hair designs, and also let's say tutoring, taxi drivers, garden maintenance. Even all tuk-tuk drivers are entrepreneurs, sole traders, right? So because they're independent workers, right? Providing some service, they're working alone, right? They're doing a service sector business. So these are the main advantage. They have unlimited liability. This means the business fail. Even if the business fails, sole trader can lose money more than he was originally invested. That's a disadvantage. Look at the advantages now. When you're writing a analyze question, you have to write 2 points, like one advantage and one disadvantage. Oh, if you have 2 benefits, you have to write 2 benefits out of this with the explanation of the case study, right? Advantage of a sole trader. The owner keeps all the profit. 100% profit can enjoy by the owner. And they are independent. Owner has a complete control. So they are not working under someone else. They are independent and control. And it's simple to set up with no legal requirements. They have flexibility. For example, can adapt to any changes quickly and can offer a personal service because they are small, right? Personal services you can offer for the people and may qualify for government help. Sometimes government encouraging people to entrepreneurs to start their business. However, there are disadvantages of being a sole trader. You have unlimited liability and may struggle to raise finance. That's a disadvantage because difficult to raise money because it's up to your business level, up to your qualification, up to your savings. That's why some of the people actually initially of their life, about 5 years, 10 years, they work for someone, sometimes a foreign job, and they collect some money. And after they come back to their home country and then they're starting their own business. So capital is important thing because initial capital is very difficult to find for some owners. That's why they start very small scale because they don't have enough money in the beginning. Even bankers, they're reluctant to invest in the sole traders because they know if something happened to the business, if business collapse, this loan cannot be recovered. Independence may be sometimes too much responsibility, a burden sometimes because you can't take a long hours, hard work, can't take a break. Then you have to close the business. Can't if you want to go for personal commitment, imagine you can't go for a birthday party, wedding, anniversary. Why? If you go somewhere for personal thing, academic commitments or personal commitment, then what happen? Then you have to close the business. So in that particular day, no income. That's why. So a lot of people, that's why sometimes they hire managers later on. People, then you can take a break and you can do your personal commitments and then you can expand the business. So eventually they can hire some people if you have money. But in the beginning, sometimes it's very difficult to hire people. So they have to do everything by themselves. Accounting, sometimes not compulsory. And maintenance, administration, shop opening and closing, everything, security. But later on, when you expand your business, let's say hardware store, later on you need to have some kind of you can like recruit some drivers, some helpers, some kind of like a people like a clerks, some girls, like to help with the accounting and all. Then you can actually you can start small like a one man, or then later on you can hire some people as a helpers. You can give some wages for them with that money. Then that's how you have developed like a step by step. You can develop long hours and very hard working. That's a disadvantage. You're a sole trader alone is operating, usually too small for expert economies of scale, which means because of the small business you can't go for big orders, like you can't apply for like a government contracts, like imagine if you're one sole trader doing hardware business, you can't apply for like a big tenders and everything, difficult because your capacity is low, or you automatically the tender board will reject you because your capacity is minimal, like you don't have that much of power to supply for like a highway project, something like that. Your requirement materials is not enough. And no continuation, like no continuity. The business dies with the owner. This owner dies, business also dies with the owner. Therefore, that's another, we call this situation unincorporated. Unincorporated, right? So in my handout, I have given these all features with the small cartoon. You can see the owner of a business is waiting for a bank loan in a bank. Notice we only deal with limited companies. These are notice given from a bank. Notice we only deal with limited companies. So he's thinking, I'm a sole trader and starting to feel more solitary by the minute. Right? You can see I'm a sole trader. There's no one there to help. We only mention especially, we only deal with limited companies. Then he's a sole trader. In order to convert the business to limited company, I'm talking that in a different session about the limited company, there's a process. You can't just start a limited company. There's a registration procedure. So it's a little bit difficult and a lot of documentations and everything is there. That's why for sole trader, a little bit is too much for a sole trader. Some bankers, they're reluctant to go with the sole traders because of this situation. The sole trader, there is no legal formality. Everything goes with the owner. If or something happened to owner, they cannot recover the loan and everything, right? So sole trader is a business owned by a single person. And again, here I'm summarizing the advantages and disadvantages. And here also for entrepreneur, you can write down the DO, decision making, innovating, organizing, risk taking. These are the roles played by an entrepreneur in a business organization. If you become a sole trader or partnership or shareholder of a company, you have to take this decision making, innovating, organizing, risk taking, DO. Right. Okay, now we are moving into the next level of business organization. You should identify, okay, now being a sole trader is enough. Let's go to a partnership. Okay? Sometimes in the beginning, also from the beginning, you can start a partnership with someone else. Like sometimes some people want to do like that, not doing business alone. It's risky. Sometimes let's do together. For example, the fishing. Some people go fishing alone. but it's risky. If something happened to his life, there is no one to save. Sometimes they're saying, okay, let's go fishing together, right? Then someone can handle the boat and other one can focus on the fishing. So it's sometimes safe for them. Then they can say, okay, we'll share the profit 50-50. Like that. That's kind of situation. Partnership is like that. So there is a agreement between these partners, verbally or in writing, and they are doing some business venture. After that, they share the profits. Profit sharing also they call it agreed levels, sometimes 50-50 equally, sometimes 70%, 30%, 50% to it. Sometimes so partnership business, it's not always 2 to 20, minimum 2, maximum 20. In the definition also you can find out the partnership definition here. You can see partnership is a business organization formed owned by 2 to 20 people. You can see the definition you can write down. Business owned by between 2 and 20 people. Business owned by between 2 and 20 people. Right. So in the partnership business organization, right? Like normally business organizations are normally they can start a business as a partnership in the beginning. Like some organization from by the law, it's mandatory to start the business as a partnership. For example, yeah, some people asking, is it similar to Shark Tank? Yes, actually, Shark Tank thing is a different process. Actually, that's happening a venture capital thing. In that case, the people they're investing their money for the people, like sole traders or some partners, small businesses to for new startup companies with the new ideas. So they are joining the business. They say, okay, you have to convert the business as a private limited company. Give me shares. I would like to invest. Let's say I would like to give 50,000 US dollars for a 20% partnership or 30% stake, 40% stake, 40%, 60%. Sometimes they might like the decision. So partnership exists between 2 and 20 people. Keep in mind those limits, right? So 2 minimum, maximum 20. Why there's a maximum 20? Sometimes students ask me, so why there's a maximum 20? Because always there should have some limit. Because if you go about 20 means it's difficult. Difficult means difficult to even have a meeting also. So we are writing down here, minimum partner should be 2. Maximum partnership can have is 20. Main document that need to draw up, we call deed of partnership. Deed of partnership, DOP, deed of partnership. And what is the deed of partnership? Like it's the agreement, between the partners. If you have, let's say we have 20 partners, 15 partners. Imagine we can make up some kind of agreement with all of us. Okay, this is our profit sharing ratio. This is the amount that we each and everyone invested to the business. This is how we actually agreed to share the profit at the end. This is how we agreed to share the interest on our capitals. This is how we agreed to share the interest on drawings. And this is how we agreed to take the salaries from the partnership. Like that, everything, all the information, rules and regulations. This is how we can introduce new partner. This is the process of leaving the partnership. If you want to leave the partnership, this is the process. Like that, you can say different thing in a period of partnership. So this part you can copy down from this section. You can see the contents of a deed of partnership. Right here, you can write on page number 21. You have these details. You can see deed of partnership is the main document. You can see when you have an idea of starting a business like as a partnership. Let's say you can start a partnership with the, let's say, father and the son. Father and son. Let's say you can say, okay, if your surname is, let's say, Pereira and Sons, or Pereira Associates, Jaisingh and Sons, or Jaisingh Associates, Rodrigo and Sons, or Rodrigo Associates. Like that, you can different partnership we can have, like a main part. Imagine if you are willing to start a new business as a partnership, you want to make a agreement, we call deed. They should go to a lawyer will be make this deed, and you have to agree and you have to sign in front of the lawyer. After that, it's become a legal document. It's like a main agreement of the initial partnership. So it's a binding legal document which states the formal rights of the partners. So in this document, we have this thing, how much capital each partner will contribute, how much profit and losses will be shared by partners, profit sharing ratio we call, the procedure for ending of the partnership, how to end the partnership. If you want to leave the partnership, what is the process for that? You can just say tata, bye-bye, and you can go like that. There's a procedure. You have to close your accounts. If there are some debts, you have to settle that thing. Certain things, those, everything there. How much control each partner has. Rules for taking on new partners. because you can't just introduce a new partner. You have to get everyone's approval. If new partner join into the business, you have to get the approval from everyone. You can't just introduce. So one instance, actually, father wants to introduce his son as a partner to the business, but other partners, they disagree. They say, no, we don't need our children to take into the business. And then what happened? The person wants to leave the business. He say, if you don't accept my son, even I'm also not staying here. And then he left the business. So in that case, other partners went to court, and they actually, after that, they took a decision. Okay, they said they are leaving like that. There's a procedure like this, and when you're entering new partner into the business organization, you have to get the 100% approval of the each and every partner. If one partner is not like the decision, then you can't take the new partner. You have to get the unanimous resolution. Unanimous is full 100% agreement must be there. These are things. Just write down these 5 points: 1, 2, 3, 4, 5 in this space. What are the contents of a deed of partnership? These are important. Sometimes you have some state, two contents in the deed of partnership. Describe, explain. Sometimes, okay. These are the advantages and disadvantages of the partnership. Look at this. Easy to set up and run. He also, like sole traders, there is no formalities. Partners can specialize in their area of expertise. Like expertise, like here, if you are a lawyer, there are different type of lawyers: criminal lawyer, civil lawyer, company lawyer, right? Different legal cases they are handling. So they will be taking doctors also, dental practice. Some people are expert on the different practice. Doctors, you can see some people are cardiologists, heart specialists. Some people are brain specialists. Some people are pediatrician, child specialist. Like that, you can give some better customer service out of that because of their specialization. The job of running the business is shared. Like a burden can share, losses can be shared, and also workload also can be shared. More capital can be raised. Yes, we have 20 members are there. Up to 20 can go. So more capital can be raised. And financial information not published. Private company, public company, you have to publish the financial information. Especially share market operator, you have to publish it. But here, no need to publish it. So information are private and confidential. However, there are disadvantages are there, like partners have unlimited liability, which means in the same to the sole traders also, which means in case if they bankrupt, partner has to settle it from their personal belongings. Profits has to be shared. In sole trader, you can enjoy 100% profit, but here, partners, you have to share the profits. And in partners, maybe disagree and fall out. That's the main third one, like most popular thing. Friction between partners, disagreement, fights, arguments going, and they fall out. They say, I can't say here, and they're leaving. And any partner's decision is legally binding on all, which means like a legally everyone responsible for everyone. If someone doing an illegal thing, other partners also they are bounding to that decision because it's like a mutual agreement is there between everyone. Other partner doesn't know that this guy actually doing illegal business, but that doesn't matter. Even though you are with or without your permission, if someone doing some illegal activity through the partnership, everyone actually bound in illegally. Everyone has to go to jail. And last one, partnership will still tend to be a small business. Yes, because still we are classifying the partnership means small business because employees, partnership, small business mean according to European Union, if you have less than 49 employees, that's called small business. Most of the partnership, there are less than 49, 50 employees, right? It can be a large business mean like if you're working more than 250 workers, that's called a large business. But most of the partnership, we don't have 250 plus workers. Therefore, always we classifying sole trader business and partnerships are the small businesses. So therefore, in your business paper, always partnership and sole traders are the case study coming in the small business paper. And in large business paper, always case studies are coming from the share market, PLC, public limited companies and private limited companies like Tata Motors, Apple, like big companies in the world. Always small business paper, your paper one is always, you can see the case studies are coming from the sole traders. Like there was a past paper question from the Kenyan shoe company, backyard shoe. It's only like a sole trader business. Another one, Oli Tanner's drumming school. He's teaching drumming lessons. Sole trader is a tutor. So that like that small case studies are coming for the small business paper, right? Okay, from that we'll wind up our today's session. So today I actually my summarize it. So summary of my lesson is I discuss about the sole traders and partnership. We talk about the advantages and disadvantages, and we go through. We actually run down about the sole traders, mainly entrepreneurs like Jeff Bezos in his net worth 177 billion, right? And then the richest people. If you have time, just check this website, Forbes magazine. It's a wonderful website to actually check. You can see real time winners and losers. You see per day, some within day you can see some people billions of money increasing. You can see here Mukesh Ambani increases his net worth by 2.4 billion. But look at this guy, Mark Zuckerberg lost money by $5 billion even only 24 hours ago. Real time winners and losers was there because of share market fluctuations. Share market fluctuations, right? This is the thing. So always there's a winners and losers, gainers and losers. Always that's the reality of the business world. So, but anyway, doing business is better than doing nothing. Okay, from that, then we'll wind up our today's session, guys. Then thank you very much. See you tomorrow in my next session. Thank you very much.